Burgess and Bolton's weekly wrap-up.
Hi, Jeremy. Happy Friday.
Happy Friday to you too. You okay?
Not very happy, though, is it? I'm in lockdown and you're not, presumably.
Yeah. No, I am not in lockdown. I don't know. I actually have no idea about the rules. I just let people tell me. Maybe my wife. But there we go. Welcome, everybody, to this episode of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market. We've got a bit of news to kick us off, and then we have a guest, friend of the show, Ben Rose, founder of Riskbook, is back with us. He's going to be talking about what he's been up to over the last few months since we last talked to him, but also going to pick up on a couple of themes actually that we've been touching on for the last couple of weeks around technology and technology-led change. Last week we focused in on claims and claims transformation. I think it'll be interesting to see how the landscape has moved over the last 6 months and how it might progress going forward. So let's move things on. Let's do some news. Ben, shall I do news first, or do you want to do news first?
Yeah, you do news. Yeah, do your news.
I'll do my news. So my news is, I saw this today, actually. So car theft surging in the UK, insurer reveals. I don't actually think this is new news. I think quite often this story comes around where car theft surges. There was a couple of pieces I just wanted to take out of it. Firstly, that is no way to steal a car. Sticking a screwdriver into a key, it just doesn't work nowadays. And that's what it comes on to, really. It's all about technology. So picking up on the theme, really, of today's show, being able to clone the key, essentially, and steal your high-end luxury car. So, yeah, it was quite interesting that this comes around time and time again. I think, for me, technology-led change and how we are changing our lives around technology, it has upsides, but it has downsides as well.
I wonder how insurers are going to keep up with some of this, because it's a lot of this stuff that's all raging ahead, and going so fast, whether the insurers are keeping up with it, because these articles always come out, don't they, about what once something's been introduced 6 months later, you find out that it's made it easier to steal. I was talking to someone the other day about, debit cards and credit cards and phone payments, and how debit cards are much less secure than phone payments. And, that doesn't come out, but I wonder, how much insurance is in touch with that sort of thing.
Yeah.
It seems like, as the consumer, we're often missed out on the fundamental communication. We didn't get the memo.
Yeah. And I think in the second paragraph there, it talks about the keyless cars and Apple's recent car key partnership with BMW. So that's just an example of, quite often in the industry, we talk about ecosystems. And I think there's one right there. Those technology company come together with a car manufacturer to develop something new. And I think we'll see more of that. We definitely will see more of that. Just in the spirit of consumer kind of advice, I also found out that you could put your key in a tin, and it stops it from being robbed. So there you go. I've absolutely no idea whether that works, by the way. Just before you.
So what do? You put it in the tin, and then they can't get into the tin, or does it stop the electronics working?
Yeah, it stops the frequency from escaping, so they can steal the frequency on their device.
Oh, that's crazy.
It is, but there we go. That's my news anyway. Yeah. You got some news, Ben? Claims, is it?
Yeah, so I'm talking claims. We've talked claims for the last few weeks, but it's clearly an important topic. I was not sure when this came out, but the CII and Sian Fisher talked a lot about the importance of claims in the future and modernising the approach to the products and services in the industry. And I think this is a really good kind of theme for this for everybody, really, the CII. And I took a look at the trust survey that they do, which they publish on their website, done in association with the Institute of Customer Service.
Yeah.
And I picked out this particular slide, which is SMEs. So I was talking at the conference the other week about we've seen a hit on service quality and from the brokers, but this is the actual businesses themselves. And what I think is interesting is they're correlating here the businesses that are impacted by COVID, which is about 80% of the businesses in their sample now. This was May, so this was quite early on in the insurance terms. And they've defined it as no impact, somewhat impacted, and significantly impacted. And I think it draws, there's quite a few interesting things to draw out of this. First of all, those that are significantly impacted are focused on entirely different issues than those who have had no impact. Those who've had no impact are almost like people who are just buying insurance and sticking it in the drawer and perhaps hoping that they never need to use it, or, it's just a bit of security. So it's confidence and loyalty, and, they want to know that the companies are going to behave properly and not increase the premiums and reward loyalty, which is probably quite, understandable. But once you get this, this kind of little lab we've got now with COVID, if you like, impact makes a difference, and particularly when businesses are significantly impacted. So about 35% of the businesses in May anyway said they were significantly impacted. That may have gone up, of course, now with furlough schemes finishing and this going on much longer than people have imagined. I suspect it has. And what they have on the right-hand side there, just I've highlighted, is the opportunity score. And over 8 is a significant opportunity for the industry. In other words, it's a gap between performance and expectation. And the three things here are speed, protection, and ease. Now, we're going to be talking with Ben, about innovation and new things. And there is a lot of stuff going on. I see a lot of talk about parametrics coming through, and that's, it's not an area I particularly understand or have measured or looked at particularly, but I kind of get it. But it looks like that's opening up into a wider debate about what products could be in the future, which is really encouraging. And I think, again, Sian Fisher talked about that too, that the industry really needs to look at this and maybe move on a bit, at least in these simple products, from the heavy contractual basis of them. Because what you look at here, that if I'm a product development, if I'm an entrepreneur developing a product, speed, protection, and ease, well, do I need necessarily at this point to have a heavy insurance contract? Maybe I need something else. Maybe there are other products that allow the insurers could get into, which could be parametrics. But fundamentally, I think the industry has to sort of really think about the fact that and focus on data like this. And I know the CII is doing that, and I'm hopefully helping a small way today, a very small way probably, but focusing on this sort of data, which is saying basically, these things have got to work, obviously, and it's also, though, a great opportunity, for a very large swathe of the business population to get products out there and and grow your business. So I think it's a good opportunity, and I think it should be a trigger for more innovation, and we're talking today about less talk and more action. Well, in any segment I've ever worked in, this sort of data would be, wow, we've got a fantastic opportunity to develop a new product here. Let's just go away and work out what it is. Great.
Thanks, Ben. That's a good time to introduce Ben Rose. Let me turn Ben's camera on and welcome Ben back, friend of the show. Ben, I've even pulled out the jingle for you. Here you go. Yes. Oh, it's a bit quiet, but anyway.
Rather muted, wasn't it, for you, Ben? I'm sorry about that.
Yeah, it's not quite the. I might be able to give it a bit more welly. Here we are. Guest of the week. Bit better. There we are. Yeah. Hi, Ben. How are you? Oh, let me just. There we are.
Happy Friday to you both. Very good to see you.
You too.
Hi, Ben.
So it's been as I was saying at the top of the show, it's been a few weeks since we last spoke, and I noticed in the press that you got secured your next round of funding for Riskbook. So yeah, do you want to just bring us up to speed with kind of what you've been doing?
Yeah, absolutely. We've had growth sort of all round, really. So more money in the bank, which is wonderful, especially in these more uncertain times. Growth in the team. So there's now, I think, 15 of us in the team, and the number will keep on going up over the next few months, which is exciting. I just announced a new partnership with R10 as well, which is really exciting, helping us be able to scale sort of all of the integration and execution of actually rolling out the software across a big business, which is very exciting as well. And then in terms of the clients using our software, I think at the moment we've got one big deal going through with a Fortune 500 insurance company working with a top 10 broker to buy from a top 10 reinsurer. So there's really nice scale now in the types of brands that are using our product as well. So all exciting despite the odd sort of global conditions.
That's really cool. And we'll get on to kind of customers and their expectations in a moment. But I think it'd be quite interesting just to get your thoughts on the last 6 months. You know, we've been talking about this and running events on how COVID has impacted organizations, the move to digital, the work from home, the general success of that for organizations. And it's kind of opened, I guess, the board and leadership's eyes to what the art of the possible is. And I just wonder if we could get a sense of whether you see that in the space that you operate in, and perhaps, you know, going forward, do you see the kind of the development curve, you know, go steeper? What's your thoughts around that?
We started out as a fully remote company ourselves. So the team is based in random locations all over the world, and we all come together every week for a synchronous meeting, but the rest of the time we're all working on Slack and asynchronously. So I'm pretty confident that eventually various other industries, as well as the sort of tech industry, will adopt similar types of practices if this continues to be the new normal. I know the insurance industry has not necessarily been the quickest to disband from Microsoft Windows systems that have even been discontinued by Microsoft in some cases. We get using the Internet Explorer that shouldn't even be supported anymore, and so on. But eventually they will move on from those systems. Their teams embrace something new. But certainly among our customers, I think people have got used to video calling, which is great. So that's a positive step, but maybe less so to some of the other things that they used to around not having industrial sized photocopiers and things. They're used to managing lots of paper. So we've not quite executed a transition there to a digital form of managing all of the documentation that they used to, and so on. And really interestingly, and this will sound strange, but I think lunches is something really interesting that's gone missing. So lunches and dinners and conferences, in-person things, because we're not able to do those things in the same way anymore. In a way, that's also helping to accelerate this broader trend that I think we're going to talk a bit about today around customer expectations. Because I think in the old days, if they are to be the old days, it was very easy to have a nice dinner and accept that buying experience. And we can worry about fixing things next year, especially with this sort of annual cycle, and things end up never changing. We've certainly seen a lot more determinedness and activity from clients who've sort of said, well, we're all sat here at home and we're giving things a good hard look at, so why not try and find a different way of doing them? And there hasn't been the sort of the same atmosphere to sort of encourage you to have a nice meal and forget about everything and move on. So I think many clients and many players within the various systems are determined to really push towards something better now that they've got a chance to actually get their heads down and do something.
I think, Ben, as well, they're starting to see some of the data coming back from this period now, because it's been quite a period, longish period of time. And some of them are looking at productivity, for example, of working from home. There are all sorts of, pros and cons, clearly, of being entirely remote. But another thing that we were talking about last week, we're seeing in our data is that on balance, larger organizations, particularly in areas like claims, have done better because they've just got better processes and more of a process mindset. And then when you've got scale and a big brand, that kind of reinforces the kind of reliability of that. And of course, that works in every single market. But to your point about the personal interaction, which was always so incredibly valuable in London, and I happen to still will be, of course, particularly in the sales arena. But I think a lot of organizations, in terms of their service models, are having to think about it because they relied so heavily on that personal service that suddenly when everyone was at home, they were, I've had quite a few teams who've gone back who were saying, well, we only really had email. That was the way. And we didn't, we weren't able to triage claims via any sort of system. But I was saying, well, but a lot of your big competitors, are already doing that and have had that in place, So it's a really interesting time now. That even the smaller organizations are going to have to sort of get up to speed with this. And my sense is it's not actually, for a lot of these things, that expensive in terms of the software, is it?
For many things, these sort of quite affordable and available software tools, especially for the generic stuff, I think it's a bit harder to find specific things for insurance processes. That's where you tend to get stuck. So certainly that's been something that's been a real challenge to the reinsurance space for ages. The fact that we've had no reinsurance software that's really worked. There's always been insurance stuff that you can try and I'm sure it's been similar in the insurance world where there's been generic software that they've had to fudge to fit insurance. So I think the number of organizations that have adopted Salesforce type big generic solutions will probably have experienced some of this where it's like, it doesn't do that specific characteristic that insurance companies do. I think we have the same thing in reinsurance where it's like, if we maybe kind of stuck together Slack and Dropbox and all of the other things we can think of into one coordinated solution, then maybe that'll work, or maybe it will just be haywire and everybody will be constantly logging in and out of hundreds of different remote solutions. So we'll see.
And these very much at the moment, I also think that those two things go hand in hand. So what people are realizing is that the sharing of information and the dissemination of that is really important, and that actually, because we're now all online all the time, we can do that. But then, as you say, you have to sort of say, okay, so what sort of technology do we get? We can't have 59 different systems working globally. But guess what? If we did get one system and we could disseminate this information, imagine how much more commercially successful we could be. So I sense that. I mean, I just, funny enough, come off a workshop this morning with exactly that, where an organization was sort of, people who've been there working in the same way for many years are starting to say, this is how we've got to sort of think now.
Absolutely. I think going with that is this spirit of transparency that we're able to get with more data availability, etc. But also, again, going slightly back to the lunches and personal relationships aspect of things, customers, whether it's in the sort of personal or consumer or commercial spaces, or if it's in the reinsurance space, typically would have been more willing to just sort of hand off their requirements to a broker or to a trusted insurer and trust them to get it done. But it is very much a sort of just goes into a black hole, and then you wait and you trust that they're sorting it out for you and doing it right for you. And then eventually you get told that you've got some insurance and you got some reinsurance and whatever the case may be. But we're seeing now with things like the COVID claims, nobody really knows exactly what's covered and whether they've actually got the product that they wanted, right? It's quite an opaque process to even work that out. It's had to go through the courts to work out even if you bought, and you didn't really get an opportunity to compare the things you were going to buy on a like-for-like basis either. So I think we've seen earlier signs of that emerging in the consumer space with your aggregators and comparison websites. But it is really, really hard for, even if you are a really good broker, for you as a broker to put side by side the different things that you considered for your client and to reassure the client that you're giving them the best option, because you looked at A and B and C and you chose that A is better, but they're completely incomparable in terms of how the insurer presents those different products.
Ben, on that, do you think the industry, because Jeremy and I have been talking about this, do you think the industry and parametrics plays into this a bit, where in fact almost with parametrics you take the contract out of the equation, don't you? You just say there's a payment for X and the indemnity is triggered at a certain in a certain event or whatever. So do you think we might start to see a move away on simpler products, obviously, that you could say, well, we'll take the contract out of this, largely it won't be of relevance to the customer. They won't see it,
So there's the way you've just described, which is sort of, we simplify the products and we make them more generically applicable in some cases, so that pretty much anyone can buy them, and then it becomes a bit questionable about whether we're still in the realms of indemnity or we're creating a lot of basis risk as to whether or not that event will actually have affected your earnings in the way you, etc. But certainly it's becoming easier with so much more data available to provide triggers to any kind of policy, whether that's wind speed, earth shaking, footfall, all sorts of things that you can prove now as a basis for making a claim. So certainly there's a lot of scope there. I think the other way that I'm really excited to see the availability of data to simplify this product buying experience is to cut through some of the uncertainty around the pricing and preparation of these products. So at the moment, particularly in our space, I think we've suffered from in the reinsurance world very bad data on the underlying client's exposure. You think about it, in a consumer sense, we have quite standardized proposal forms that we fill out where we say, do we keep our car in a garage? Do we keep our keys inside a tin to protect them from? They don't ask that yet, but I'm sure they will sometimes. But for that sort of process in the more commercial space or in the reinsurance space, there isn't quite the same set of proposal forms established or any kind of structured data capture around what does a commercial client like X need to provide to its insurers and what does an insurance company need to provide to its reinsurers. And there's often so much data missing and so many pieces that just aren't included because the mechanism for flowing all of that data through the system hasn't really been built in a successful way until now. I think we're certainly working on that in the reinsurance space. I think it will start to emerge more and more in the insurance space as well, such that you can get more of an automated pricing approach, or at least faster pricing that can also then be more quickly tailored to what you actually want to cover, and not just sort of a broker's best efforts to go away and say, well, this is the one you've got because I took your pile of spreadsheets around to a few markets and this is what came out. I think that there's certainly room for some more sophisticated and tailored
and actually a lot of the market, particularly in programs and so on, and it's hugely labor intensive, isn't it, what the brokers have to do? I've been working on this with one of the big brokers, and we'll bring something out in a few weeks, but it's no wonder it's so costly. And then the brokers say, well, we can't do this, we can't even place this risk cost effectively, and therefore it goes back to the local market. It just doesn't get written at all. So and there are some changes here. I mean, we've had Bobby Turan on here from, I can reveal his company name now, Pathpoint, which is an E&S wholesale digital broker, and they're sort of taking that E&S business into London. But that simple stuff largely now just comes in without and can be auto-quoted. So it seems like it is starting to happen, and you're taking that really low-hanging fruit out of the equation, and then you start to look at, well, what are the more complex products?
People off Excel, moving from somebody doing a whip round of all their teams and saying, oh, can you send us this data, and sticking it all together in a big Excel that has to be copy and pasted and remapped in a million different ways each time somebody wants to price it, and getting it more into a sort of structured field capture system that can actually be used in a consistent and repeatable way. After that point, we're very lucky in our team to, I mentioned the growing team, to have recently recruited a genius pricing actuary with a sort of PhD in machine learning. He's doing a wonderful job in sort of bringing together the two worlds of the technologically possible and the real hardcore actuarial stuff. So very exciting to see what can as we migrate away from emails and spreadsheets.
And you think that'll spread out from reinsurance, because reinsurance is a kind of very mathematical space, isn't it? As you say, a kind of actuarial space where you can do quite a lot of that stuff almost very naturally within technology and AI. But is it as easy when you come out of reinsurance, do you think?
I think we do have the advantage in the reinsurance world that when you're taking a step up a level, you're looking at things like policy counts and premium estimates and bordereaux and loss runs, and it is sort of how many claims were there and how big were they and what were the limits and the attachments. So you're a little bit detached from the nature of the underlying business itself. And I think when you insurance space, you can have a bit more scope for, my line of business is just totally different in terms of the rating factors that an underwriter might. So I'm not surprised to see, I know I've seen various solutions emerging in individual spaces. You look at Consiris in marine, and you look at some of the other ones that are now appearing in political risk and so on. It doesn't surprise me too much that you're getting more bespoke solutions that know exactly what that sort of structured proposal form will need to look like for those lines of business.
And that's a really interesting point, because I think certainly work, that we've been involved with around, looking at portfolios, which everybody is looking at. You can see that the way that they have to operate is very different in different classes of business. So although they're still in the world of insurance, they are actually very, particularly in terms of the data and the knowledge that you should acquire. Say if you're the lead on it, if you take something like PV versus property, DNF, for example. I mean, they're traded in such a different way, and that would, my view would accord with yours, that in the end you probably do need quite kind of specialized software actually in some of those things, but that the software could certainly help, because the data degradation is the issue, isn't it, from effectively the customer to the underwriter.
It's one of the funny things in a way. I think it raises a difficult question for the industry, in that, is it going to come down to the customer to solve our problems more than us? I don't want to suggest that we can pass the buck in any way, but somehow the customer needs to get to the point where they can provide us with better data. I think in the spaces that are still heavily broked, that's going to be the broker's role, to really give them a better means of preparing that data. But yeah, without that, I'm not quite sure how we'll get there.
Well,
there is
yeah,
one.
Sorry, go on.
That just does come to mind in the sort of talking about new products and more complex products and so on. I'm really curious in the commercial space, especially, to see whether we get this emergence of more product 2.0, where you have a service instead of a product, and it has all of the risk management and replacement and insurance type services bundled into the receival of the product itself. So you've got machine components or things that, whenever they are about to break down, you've got some sort of IoT that's predicted and done predictive maintenance on that beforehand, and someone's come in and replaced it before you've even realized what's going on. Be very interesting to see if they sweep the rug from the insurance industry's feet to some extent by coming in and providing that type of service instead of an insurance product.
Well, and I think Jeremy and I have talked about this, which is, we were just reflecting on both of us running businesses and what we would have liked as a product. And I think we both agreed we wouldn't like a product that was worked out by the insurance industry at the point at which we claimed, as it has been. That would definitely not be what we wanted, and because we wouldn't have understood what we paid for in the first place. But we did both think that if we could have bought a product that said, we could have had, a 50 grand payout on X happening, we would have been able to sort of be part of that process and work out from our own business perspective what we would have needed and what we would have been happy to pay for. So we would have understood the value at the point of sale, not later down the line. And I think this is one of the big issues, is the disconnection between the policy and the actual pricing of it.
Watch the tech companies, see what they come up with as well. I know there's ones like Tesla doing their own sorts of things.
There'll be a Burgess and Bolton product soon, Ben.
Yeah,
which you can, certainly we're looking for investment in it.
So I think that's really interesting. That kind of, if you look in the personal lines markets, the way that they're trying to become more like retail banks, where essentially you got an app on your phone, you deposit everything now electronically. It works for you as a customer because it's extremely convenient, and obviously for them because it reduces costs. And that, I think that's really that intersection between kind of technology providing the data, whether that's through Internet of Things or whatever it is, and then the client having a better understanding about what's needed for the policy to work for them. I don't think that's far away. Some of the, I was reading about the next iPhone, and actually just about the technology that goes in there and the amount of transistors or something like it that they've managed to pack into there, because there's a new way of developing these transistors that run on light, and it's just incredible. And it's just, as soon as that becomes ubiquitous and everybody's got it, suddenly a whole load of new things become available, and it's moving at such a pace. And I think there is, Lee Ellison brought it up in his talk last week at London Market Claims, that there is a danger that organizations, I think you've mentioned it as well, Ben, that organizations will look at this technology and these innovations and they will just go for it. And the market initiatives, which spend a lot of time thinking about things, putting committees together, making sure everything, tick boxes, it's got to work 100% before we release it, all that kind of stuff. It's just not the way to kind of operate in this rapidly developing digital environment. And yeah, I just wonder what you thought about that, Ben, just from your perspective, sitting in one of those kind of fast-moving companies.
Yeah, it's totally true. And I think actually that was one of the main frustrations that drove us to build our own firm. We'd seen numerous historical failed attempts to build a sort of shared placing infrastructure across the industry. And you'd seen also collaboration attempts, but the collaboration attempts always seem to exclude somebody, right? And then especially in the reinsurance space, with it being a global business, even when you've got the whole of the London market collaborating on something, then it means that people outside of the London market don't get to use it. And for reinsurance, there's a problem. And similarly, we've seen various attempts where people have tried to group together or create their own solutions as a firm, which drives even more fragmentation. If broker one has got their own tool and underwriter one has got another tool, quickly that becomes broker 1,000 and underwriter 1,000, and everybody's logging into a million systems at once. So we found the most productive route has been to create a independent and a fiercely independent. Part of our funding has helped with that, again, making sure we don't take any money from any incumbent players so that we can stay totally unbiased. But certainly creating an independent player that can go and listen as much as possible to all these players, but not be bounded by the fact that everybody who's put some money into it or has a committee seat on it can veto something or hold things up is really important. So certainly it's a dream to be able to avoid all of the change requests that have to go through 4 committees to try and approve a new feature. We can just literally run at it knowing that we're working to the best interests of our clients, because we listen to them and sit with them all the time to try and hear what they want.
So Ben, is it just I'm really interested through this period, what's the sort of view you have of insurtech as a kind of thing, as a kind of segment of the market? Because it's still there, isn't it? But I maybe sense that it's perhaps moving on, maturing a bit, and actually people are saying, look, I'm not part of a thing. I'm not a label. I'm actually just an organization that's doing something. Is that a fair point, or is there still a real necessity for the message about insurtech, for example, for just attracting investment and things? Is that still very important?
Something that requires like a whole new taxonomy now, if this is the new normal. Because I think you had firms like ours, which I think were going out to sort out a big known problem in the market, others that were finding a much more cost efficient way of doing something traditional or new. Again, this is a rough taxonomy made up on the spot, so apologies if it's a bit.
We're good at making up stuff on the spot.
But the other kind of things you can imagine as well that are in completely different spaces is great. Suddenly the entire industry is working remote. That's a whole new platform for new insurtechs to emerge that didn't exist before, that now come out. So we might see a bit of a revitalization for that, as well as some pivots. I mean, if you look in fintech more generally, firms like Monzo and Revolut are struggling a bit at the moment, understandably, because they relied on being able to track everybody's expenditure across all these different enterprises. And now if nobody's going out, you can't see how much you've spent on going to the cinema this month because you weren't allowed to go to the cinema, then certainly that business model is affected around monetizing the customer as well. So yeah, there should be a pretty profound shift, I think, in the focus of that. And we've certainly heard from investors a very profound shift as well in terms of what they think is going to be important going forwards. Fortunately, I think we're in the good camp in their view in terms of sorting out a B2B problem that isn't going away anytime soon, unless someone comes in and sorts it out. Definitely a change.
So you're saying that in the the kind of more blue sky kind of innovation is perhaps less attractive at the moment. It's more about what can we focus on that needs to be fixed that will really have value.
If there is blue sky that's going to get support at the moment, it needs to be one that's directly taking into account the new normal. I think there was a steadier ground from which to imagine the moonshot type ideas before. And now we all, I think, have appetite. We're seeing appetite in the investor markets for ideas that could be a moonshot based on the new normal instead. So if this is what life will be like from now on, what's going to be a really important service or product given those circumstances? A lot harder if you're basing that moonshot on a reality that might no longer exist.
And I think that's incredibly hard at the moment, isn't it? I imagine for investors to believe any of this, because they know full well that it is incredibly hard to plan even the next 6 months, let alone the next 2 years. And certainly my clients are saying that, we're talking now, but we don't know what we're going to be doing in March or January of next year, which is it's just hard. It's hard to run a business like that, and it's hard to create investment, isn't it? That is always going to be a constraint.
Absolutely, and I guess we have to also be mindful of we talk about how we can use technology that's going to change the insurance industry, but I also thinking about how the current situation is going to transform and in many cases destroy or create tons of new insurance customers. So it's going to be very interesting to watch how our industry can respond just to the fact that so many traditional businesses won't be operating anything like in the same way they normally were. I mean, if you're a leading provider of employers' liability or workers' compensation insurance at the moment, and none of your employees actually go to the office, that's probably going to be a very interesting renewal conversation this year. So we'll have to see probably a whole range of those as circumstances play out, if this becomes clear that it's not going to be just a one-off that was a bit different than normal.
Yeah, I agree. And I think that, we're looking at a lot of the industry talk has been around claims, hasn't it? But actually, really, it's about what's the wider commercial damage worldwide, and what will that transform into? And and then you've still got things that are accelerating, like, the whole car industry, for example. Auto insurance, I think, is going to change dramatically, which way, whether it's because of autonomous vehicles, or it's because of rentals, or whatever. You could look in all sorts of different directions there to say, but that's a huge part of the insurance business that could just disappear altogether in some way, shape, or form over the next few years. And once that happens, it changes the whole mindset, doesn't it, about the industry?
Yeah, exactly. I mean, you raise transport. I mean, especially if you look at the money that's been plunged into public transport initiatives, which now we're sort of having to think for a moment, is that even going to make sense going forwards? Or what's going to happen to the aviation insurance industry from here on, depending on demand for aviation in general? There's so many question marks around the underlyings that I think will really impact the insurance market's response as well.
Someone came out, I've got a friend who works for TfL, and he said at the moment we're very efficient at moving air in and out of London.
Yeah, there's not many people on the tube at the moment. That's for sure.
Right, really, but that's that's a fundamental. You just couldn't have imagined this a year ago, and it's going to change everything, isn't it? And I think insurers are tending to look at insurance and like it'll sail on, but I think there's going to be a bit of a wall at some point economically, and we probably ought to be thinking about that too.
Especially country by country. We're fortunate so far in this country to have a lot of availability of funds, shall we say, to prop up various parts of the economy, which means that I guess for most insurers, the worst is yet to come if that support does stop. But yeah, the division between what risk can be handled by insurers versus what can be handled by governments is definitely going to be brought into question by this, and we might end up with some new uninsurables or pools or fund of last resort type structures, I think, for this sort of thing going forwards.
That's great. Well, thanks ever so much for coming on, Ben, and sharing your thoughts again. Hopefully we can invite you back in another couple of months, and maybe things will look a bit clearer, and we'll be able to have a good discussion about the positive stuff that Boris and his team are going to supply us. But anyway, thanks ever so much for coming on. It's always a great discussion, so thank you.
Yeah, thanks, Ben.
Thank you, and have a great weekend.
Have a good one.
Great. Goodbye. So it was great, Ben, wasn't it? I really enjoyed that.
Yeah, it's very interesting. We're all in all different parts of the industry now thinking about the same issues, and it's starting to, I suppose, unfold. Wow, it's big lot of thinking. I'll talk about industries that are thinking and not thinking, and at the moment everybody's thinking, and that's what creates change. It's ideas for me that always drives this change. And someone like Ben, he had an idea, and now he's in the maelstrom, and he's probably having other ideas, where he moves on to. So and with so many people doing that and across the industry, there's got to be some change. Yeah,
it's pretty exciting. Very good. Okay, let's wrap up the wrap up. I'll do that. What are you doing this weekend?
Well, not a lot. All of my social events, because I have a very active social calendar, Jeremy, have been called off. So no, I had one thing on, and that's not going to happen now unless we do it outside, which I'm not really so keen on doing. I'm going to try and get out, and that's. It's just going to be with the family, though, really, because that's all we can do. So that's all right.
Yeah, that is fine. That is fine. I think I'm in a similar boat, along with everyone else in the country, really. So that's good. Excellent.
I'll be dancing in the street tonight, though, for the final hurrah.
Oh, when's it kick in? I really don't know. Tomorrow, is it? That's it.
The police will be herding me home at 10 o'clock at the curfew. Yeah.
You'll never take me alive.
No, exactly.
Yeah, that's it. Good. Great to see you. Thanks for everybody. Thanks. See you next week.
Yeah, have a great weekend, Neville. Cheers.
Burgess and Bolton's Weekly Wrap Up.